we've seen banks actually oscillate back and forth between allowing more loose credit in terms of 150, 160% loan to value ratios and then tightening back up. There are different banks operating in different ways, those trying to gain market share, those trying to be more restrictive right now. You can probably get approved for an auto loan today. And I'm thinking about Carvana, for example, which they've come out and they said as long as you make $400 a month, you can get approved for an auto loan, which is like, I actually don't physically know what to say to that because like, no.
Hello and welcome to Soar Financially, a channel where we discuss the macro to understand the micro. My name is Kai Hoffman. I'm the @JR Mining guy over at X, and of course your host for this channel. And I'm looking forward to bringing on a new first-time guest here. It's Zach Shefska, and he's the owner, founder, and one of the brains behind Caredge.com. Really looking forward to expanding into the auto industry here today and really trying to understand and learn what is happening. A few of our guests have mentioned before, we should take a closer look at the auto loans and car loan industry. It might be the second subprime mortgage crisis looming in the US, and we'll drill down on that topic. What are some of the underlying trends? How are Tesla prices developing in the US, especially used Teslas now, whether they're rebranded as Hondas, Toyotas, or Audis? I've seen so many various stickers out there. And just trying to figure out what is happening. Is it really that big of a risk? Should we be worried? And I think I found the perfect guest for it. We just had a chance to catch up a few seconds here before hitting the record button, and I think we're in for a good time here and an educational time as well. Before I switch over to my guest, hit that like and subscribe button. Helps us out tremendously, and it's free. Doesn't cost you a thing, so thank you so much for that. Now, Zach, it is great to have you on the program. Thank you so much for joining me.
Yeah, Kai, thanks so much. Really grateful to be here.
Yeah, really looking forward to this. As I said before, this is all new to me. Like with Melody Wright on the real estate side, I'm really looking forward to learning more about the auto industry, especially the economics behind it and how are things looking and developing. What are some of the underlying trends, of course. But maybe we'll start with a bit of a bang of a question here. But does the auto loan industry have the potential to bring the U.S. to its knees financially here?
Wow, you're coming in swinging, Kai. I appreciate it. I'm gonna say the short answer is no, and that's only because auto loan debt only represents a trillion, $1.5 trillion compared to the mortgage asset class, which is $10+ trillion in debt. So it's just the magnitudes of scale are different. That being said, what we're seeing in terms of auto loan delinquency is through the roof right now. So some of the stats that I think your audience may find compelling. We have 60-day delinquencies. So, auto loans being unpaid for 60 days or more. That's actually up 1.9% year over year. And when we start to look at the data, the subprime category, 7.73% of subprime auto loans are severely delinquent right now, which is actually a little bit of good news. This time a year ago, it was 7.99%. However, these values that I'm sharing with you, they are at record-setting levels, pre-pandemic records, pre-Great Recession records, 20, 30 years back. These are the highest levels of auto loan delinquency we've seen. And the actual annualized total default rate on auto loans is at 3.42%, which is the highest level we've seen dating back to pre-Great Recession, which is up from 3.33%, which is in the prior month's data, and 3.13% a year ago. So you have more and more auto loans in default and more auto loans going into delinquency. One other stat, the actual recovery rate of these vehicles that are then being repossessed is quite low as well. So that means when the financial, the financial backer, the person who wrote the loan, the organization that wrote the loan, when they do repossess these vehicles, how much of the vehicle's value are they actually getting back when they take it to auction? It's very, very low. And so it's really a pretty bad situation in the auto industry. But to answer your question directly, no, it's not going to take down the U.S. economy because it's 1/10 of the other debt structure that's so common, the mortgage.
Yeah, appreciate that. It's really, really interesting. And I guess a car is easier to repo than a house potentially as well. And, I've actually on Instagram from time to time, a guy pops up that just tows cars and just pulls into people's driveways. And he's getting millions of views just on that. Like nothing special, just him driving a truck and repoing cars. Really, really interesting stuff.
Yeah.
Has that really increased? Like, I'm really trying to figure out a bit of a trend here as well, Zach. The Fed started raising rates in March 2022. Have you seen that impacting your customers here?
The reason that we're seeing repos increase and the reason I think we're seeing this softness right now in terms of delinquencies and defaults is not necessarily because rates have gone up. It's because during the pandemic, when there was the quantitative easing, giving people money, cash, those stimulus checks, there were a lot of forgive me for calling it this, stimulus ballers going out there and buying cars or leasing cars that they couldn't really afford. And so now I think we're seeing the ramifications of that, especially when we see that the negative equity situation is as terrible as it is. So that's this correlation between used car values and what's currently owed on that auto loan. And so I think a lot of folks, Kai, are ultimately seeing themselves in a situation where they are so upside down on their car that they're just walking away from it. And so I think it's a result of, it was very easy to get approved for credit 3 years ago. There were a few extra $1,000 in your pocket a few years ago. Let's go be a baller. Let's go get a Mercedes Benz. Let's go get a vehicle I can't really afford. Fast forward 3 years, we now have the auto loan delinquency and loan crisis that we're in.
Yeah, no, it's a really good point. People had more cash in their pockets, of course. Does that mean that the down payments were just higher and they can't afford the down payments anymore? How did that translate? Because right now, SERP, of course, has ended and not everybody's getting the handouts anymore.
Yep.
What does that look like?
I mean, today there's a tremendous need to actually bring cash to the table to get an approval because banks have actually oscillated quite far on this spectrum of loan to value ratios. So during the pandemic, when there was the cash getting put into Americans' hands, banks were actually doing loan to value approvals 140, 150, 160%, meaning if a vehicle was only worth $10,000, but you needed to finance $16,000 to actually roll all the fees and maybe roll your previous vehicle's negative equity, you were getting approved for auto loans by banks at 160% loan to value ratio. Nowadays, we're not seeing banks as aggressive on loan to value ratios, which means you need to get, you've got a $10,000 car you're purchasing and you need $16,000. You need to show up with maybe $2,000 or $3,000 extra dollars, which is very challenging for people. So we see a little bit of an affordability crisis right now, which makes it challenging to get into an auto loan, not to mention the fact that the average APRs for used and new cars used cars just hit a 40-year high at almost 15%, and new cars are not too far behind at like 9.69% is the latest data from Cox Automotive. So there's an affordability crisis angle here. Banks were very lenient with their auto loans, the loan to value ratios a few years back. They've tightened a little bit. They've loosened a little bit. They're trying to find a good footing there. And all the while, these financial institutions, they make money doing this. So, they've got a lot of people that they have paid on payroll to make sure that they make money and make smart bets. But there is definitely some weakness in the market.
160% loan to value ratio doesn't sound like a smart bet to me, quite honestly. Because as you said, like if you roll in all the fees, you're never getting that money back. So the question is like, who's eating those losses? Really trying to understand who's footing the bill here.
There's a tremendous negative equity crisis right now. Caredge, our company, and Edmunds do a lot of research on this. There was a Wall Street Journal article last year that picked up on this and talked about how dire the situation is for many Americans. It's something like 1 out of every 5 consumers that is in a negative equity position, Kai, is upside down by more than $10,000 on that auto loan. So let that sink in for a second. 1 out of every 5 people that is upside down by more than 10 grand. Who eats that? The customer. And if the customer doesn't eat it and their vehicle's getting repossessed, then who eats it? The bank, because that's when they're seeing, the repo rates, the actual rate of return when they go to sell that vehicle at auction, it's quite low. The car's just not worth what it was worth a few years back, or at least what the loan was written for.
Yeah, absolutely. Used car prices in general have been exploding, and I was a beneficiary of it. I've had an M235i. What a beautiful car, 2016 model. I miss it dearly. I used to live in Vancouver, and I think I drove it for free for 2 years.
Yeah,
and sold it for the same price. Actually, I might have made $1,000 Canadian actually on it, driving it for 2 years, which was insane. How's the used car how's the used car market looking these days, given all the headwinds we're seeing?
So yeah, during the pandemic, used car prices went crazy. That was a direct correlation to new car production being stymied as a result of the chip shortage and all the global supply chain issues. That being said, used car prices have come down significantly, yet they are still elevated. So if you were to look and compare used car prices today, retail and wholesale used car prices today to 5-6 years ago pre-pandemic, they're still up 30-40%. However, they're down something like 50 or 60% from their all-time highs, which was during 2022 and 2023. So the used car market has been incredibly volatile, and it is an area where a lot of consumers have leverage when they go to purchase a new used vehicle or a new car, i.e. their trade-in. There's a shortage of quality used vehicles in the American car market today, especially newer used vehicles. So there's some leverage to be had in deal making there. However, it's been insanely volatile. And that being said, older used vehicles are becoming more and more common in the United States. The average age of a vehicle on the road in the US has gone up significantly as more people have held onto their vehicles. And we've actually seen the actual mix of vehicles showing up on dealer lots and at the wholesale dealer auctions degrade, meaning more repossessed vehicles, less lease returns, and skewing older. So the used car market is kind of all over the place at the moment. However, prices are still elevated from pre-pandemic, and they are down materially from their all-time highs just a couple of years ago.
You have to explain that to me. Shortage of quality of vehicles, and what does that mean? Like, what's the quality? Is it just American cars? Is it German cars? Like, what do you mean in terms of quality?
Yeah, when I say quality, I don't mean brand per se. That can become a very opinionated argument, although
Yes.
recall data, all sorts of research around cost of ownership can maybe add some quantitative points to it. When I say quality, I simply mean more recent vehicles. So pre-pandemic, Kai, leasing made up a significant chunk of the number of vehicles that were transacted annually, new vehicles that were transacted annually. And leasing is a great thing for the automotive industry because it brings vehicles back into the market, depending on the lease term, typically every 2 to 4 years because the lease ends. Well, leasing plummeted. There was no leasing, very little leasing. I shouldn't say no. There was very little leasing during the new car shortage. Most vehicles were being sold for either cash or financed. And so there were very few lease returns. I don't have the exact number off the top of my mind, but millions of leased vehicles are not making it back to market right now. And those leased vehicles, 2 to 4 year old vehicles that were under manufacturer warranty, under manufacturer maintenance plans, those are not showing back up at the dealer auctions, at the wholesale auctions, and making it ultimately to the car dealer lots for customers to buy. So when I say quality, I simply mean the age of vehicle and how well it was maintained. We have seen a material increase in the number of repossessed vehicles, the repo rate, the repo check-in rate at the wholesale dealer auctions. It might be a little bit contrived to say that repo vehicles are in worse shape than an off-lease vehicle. And I think it's probably accurate. Most people that allow themselves to be in a repo position aren't doing the regularly scheduled maintenance, aren't taking care of their vehicle as well. And so we're seeing older and more repossessed vehicles make it to the dealer auctions and fewer of those off-lease, newer, well-maintained vehicles. So that's where I get the quality comment. The mix is just not as fresh and exciting as it may have been pre-pandemic.
Yeah, we don't need to get into it's almost a political and very emotional debate, like BMW or German
It
cars
shouldn't
versus
be. It shouldn't be. However, it certainly can be. And to be clear, there's a ton of data that helps quantify and qualify reliability, cost of ownership. However, just talking age and mileage right now and
Yeah.
maintenance.
No, it's definitely a charged discussion. It came up again recently with why aren't Europeans buying American cars? I have a long list of ideas, but that's a different story. One thing as well, like corporate fleets. How has that been developing? What does that look like? Because over here in Europe, for example, I don't think BMW, Mercedes, Audi, Volkswagen would be able to achieve their results without corporate fleets. They're super important.
This was a huge storyline in 22, 23, 24, becoming a little bit less of a storyline here in 2025. And the story is it was keeping afloat the US car market. We saw material growth in year over year corporate and government fleet sales and rental car fleet sales here in the United States, while retail sales were fairly stagnant, going up a little bit, but not nearly as much as the industry would have wanted. That being said, here in 2025, especially as a new administration has taken hold at the government level, we've seen fleet sales starting to fall off significantly. I think there's also a fear of a broader economic recession in the United States. We've seen some of the rental car fleets and corporate fleets not pick up nearly as much. But fleet sales here in the United States is like the unsung hero of those monthly, new car auto sales reports that Cox Automotive puts out. When you peel the onion back and you look at the numbers for a long period of time, that we were seeing material growth in fleet sales where retail sales were either flat, down, maybe just like a percentage point or two up. So fleet sales play a very big role here in the United States. And unfortunately, it seems like that tap has run dry, at least for the foreseeable future.
Interesting. Yeah, no, it's an interesting market, especially the comment about the recession that fleet managers are way more cautious now, which is interesting. You brought up the political side. We need to talk about that. Like, how much is politics influencing the auto market? I briefly mentioned to you we need to throw in the tariffs discussion.
Sure.
How does that fit in? I read in one of your articles on the website that about $400 would be added to each new car sold. with the aluminum tariffs, steel tariffs, and all that. It's not that big of a number, but the question is like, what's the impact? What are you seeing? What are you hearing here, Zach?
Yeah. So there's all sorts of impacts from the parts and the components level. The broader macro story is if tariffs, which are slated to go into effect here on April 2nd, if those go into effect, we're looking at closer to a $6,000 to $12,000 impact on pricing. Now, there's a really interesting storyline when it comes to tariffs in the United States, which is those tariffs, just like any tariffs, would only impact the newly imported items. So here in the United States, these dealerships, these manufacturers and these dealerships have a sitting supply of inventory that is not impacted by tariffs. And so some data here for you. Toyota and Lexus have about a 40 days supply of inventory in the United States. So if the tariffs were to go into effect, the vehicles that would be impacted for Toyota and Lexus really wouldn't start showing up on dealer lots for about 40 days. Obviously, inventory doesn't turn over on, every 40 days. There's new vehicles sold every day. There are new vehicles brought in every day. However, if you're a Toyota or Lexus customer, 40 days from when the tariffs go into effect, pretty much every vehicle on that dealer's lot will have been impacted. If it's one of the vehicles that is impacted, will have an increased invoice price, an increased MSRP, etc. Other brands, Ford, for example, has about a 140 days supply. So if I'm a Ford dealer, I'm sitting on many months worth, 4+ months worth of inventory. My new inventory that is going to be more expensive from an invoice cost to the dealership perspective and obviously an MSRP cost to the consumer is kind of 4 months away because there's 4 months of inventory sitting there waiting to be sold. So it's really important to understand that the impact of particular materials is going to increase the cost of cars here in the United States. The impact of the cost of cars will go up, or there will be an impact on the cost of cars because of the tariffs as well directly. And it's not like someone just snaps their fingers and now there's a 20% price increase because of tariffs. All that sitting inventory needs to be sold, which, to provide your audience with a little bit more context here, there are about 3 million new cars in dealer inventory in the United States right now. The lowest that number got during the pandemic was about 850,000. Okay, so the market looks a lot different today than it did a few years ago. There's a lot of inventory sitting there costing dealers money because they pay floor plan costs, they finance their inventory. So there's still incentive for cars to be sold. And there's a little bit of time here for some negotiation and deal making to happen before, it all explodes, it all blows up, and car prices have gone up $6,000, $12,000, however many $1,000.
Yeah, those are insane numbers, quite honestly,
Yes.
because I can see that crippling the industry, quite honestly, especially
Absolutely.
in the current economic environment. It's not like everybody's flush with cash as well here. So really, really interesting. Toyota, 40 days, is that the shortest period of time or in terms of turnover?
Yeah, Toyota has the slowest, or excuse me, the smallest, which is the fastest turnover. The smallest at 40 days supply. Lexus has a 39-day supply, which, just to reiterate, that means based on their current daily sales rate and how much available inventory they have, if no new Toyota vehicles came into the US market, they would sell out of all their inventory in 40 days. And Kai, there are some vehicles like the RAV4, for example, they're selling in a 45-day period more vehicles than are already on the lots today. Like they're selling 50,000 of them in 45 days, yet there are only 30,000 on dealer lots at this moment. The turn rate is so incredibly high. And then other vehicles like the F-150s, the Ram 1500s, et cetera, some of these big full-size pickup trucks that became totally unaffordable, those are sitting for 100 days, 200 days, et cetera.
Yeah, the F-150 used to be the best-selling car in the U.S. Who's taken it over? I just saw the article the other day. Like I forgot. I think it was the RAV4. Yeah,
it's the RAV4. Yeah, the best-selling car in the United States is the RAV4. It's no longer the F-Series pickup truck, and that's the first time in a long time that has happened.
Yeah, no, the F-150 has been leading for a decade or so. It's
for a long time. Yes.
Yeah. Brings me a bit to maybe consumer trends. Like what is the consumer interested in? Like when you said RAV4, immediately my mind went to the hybrid version, of course. So I'm curious, like what's the consumer looking for these days?
The biggest trend that we are seeing, well, there's kind of two markets, Kai. I think it's important to understand this. There are people who have a lot of affluence and they are purchasing luxury vehicles at record levels. And then there are people who are looking for more economical options. And that's where we're really seeing affordability be the driving factor of decision-making for many consumers. So, brands like Mitsubishi and Nissan are even trying to gain market share in the United States right now because there is such high demand for more economical options. Toyota has been excelling, Mazda has been excelling, Subaru has been excelling, Hyundai, Kia sales are through the roof as well. And so we're seeing a lot of these more mass market brands with lower price options really gain market share. And where you're seeing brands struggle are Ford, for example, with the F-Series, where the average transaction price for an F-Series is almost $70,000. It's about $68,000. So, if you also pair that with the fact that the average new car interest rate right now is 9.69%, who cares if you're financing it over 72 months? You should care, by the way. You should absolutely care if you're financing a vehicle for 72 months. My humble advice, don't do that. But the payment's just still asinine. It's absolutely crazy. And so we're seeing more and more of an affordability push here in the United States right now.
Well, let's talk EV sales real quick before I do want to come to loan terms, and you mentioned the 72 months here, but affordability, like, how does that impact EV sales? Is that even a factor in that case?
Yeah, it absolutely is. I mean, we see EV sales struggling to get more traction here because the average transaction price for an EV is about $10,000 more than the average transaction price for an internal combustion engine or a hybrid powertrain vehicle. Now, here in the United States, there are all sorts of subsidies from the federal government that try to support that, and then there are incentives from the manufacturers to try and support that as well. It's not uncommon. I mean, I'm thinking about an F-150 Lightning deal that our team did for one of our customers recently, $14,000 off of MSRP. That's nothing to laugh at. I mean, that's a tremendous discount. The manufacturer, in that case, Ford, is losing money. The dealership's losing money. Like they overproduced very expensive vehicles that now they're having to slash the prices on, incentivize and subsidize to actually transact. But the EV story here in the United States, I think, is challenged because of how unaffordable many of the electric vehicles are, even with the incentives and the subsidies.
Just quick random side note here on the F-150 Lightning. A friend of mine was trying to buy one and put the order in, and for lack of a better term, got rug pulled by Ford because they kept changing the terms on him. Like, do you have a bit of an anecdote there for us? Because there was a lot of trust destroyed here as well.
Oh, tremendously. Ford followed the Tesla playbook, which during certain periods of time seems to be very, very, very beneficial, and other times not so much. Ford was changing the pricing of the F-150 Lightning significantly. I mean, I think when they originally announced it was going to be like a $40,000 electric,
like 39,500 or something was the number I had in my head, or something like that. Yeah.
And then it got to the point where the cheapest base level one was maybe $69,000 or something crazy like that. And they were touting the fact that they had hundreds of thousands of reservations, which was really incredible at the time. And we saw obviously other manufacturers take that same path of lots of reservations, lots of people expressing interest, and the prices just kept changing, not to mention the fact that when inventory was short, dealers were then playing all sorts of games as well. So not even Ford, the manufacturer, changing the MSRPs, which again is very much new. MSRP changeovers would typically happen once per year with new models. Occasionally, there'd be a mid-model year refresh on MSRP, but very infrequently. Tesla totally changed the game on that. We saw Tesla prices going up, going down, going up, going down, and Ford followed suit. And yeah, I think it voided a lot of trust with a lot of consumers.
Yeah, my friend ended up canceling the order. Yeah. First of all, I didn't see him ordering it. He's got a boat. He needs to pull it. And doesn't make a whole lot of sense in my opinion. But that's a different story, I guess. Use case in the US is different than in Europe, of course, for EVs, where distances are greater. And I don't even own a lawnmower. Why do I need a pickup in Europe? It doesn't make any sense. A different story.
For sure.
Yeah, jumping around a little bit, Zach, let's get back to the loan terms. I think that's a really interesting topic. From time to time, Instagram is a great source of information, by the way, for me. Weird reels pop up where people talk about like 80-month, 84-month loan terms for crappy cars. And run us a bit through that. How has that been developing? You just mentioned 72 months, which is already 6 years, which is extremely long, especially at 10% APR. How has that changed recently?
Yeah, so let's run through the numbers, that kind of like the lay of the land, the current state of automotive finance, and then we can talk about how that's evolved over time, which my personal approach on this is not for the better. The average loan term length is about 69.2, 69.3 months. I call it 70 months. So that's the average loan term length. Like I shared a moment ago, for a used vehicle, the average APR on a used car auto loan right now is 14.73%. So I hate to do it. Let's round up. That's 15%, which is the highest it's been in over 40 years. And then on the new car side, it's 9.69%. That data comes from Cox Automotive. So that's kind of your lay of the land. That's how long folks are financing for, and those are the rates they're financing at. We've seen an increase in the amount of cash down to be able to actually get loans approved. We talked a little bit before about loan to value ratios, and that's obviously impacting things. And then the negative equity piece, which is how much negative equity, obviously, are folks bringing to the table. Research we did at Caredge showed that 1 out of every 2 EV owners brings negative equity when they go to purchase a new vehicle, and 40% of all car shoppers have negative equity when they go to purchase a new vehicle. The data point I shared earlier, about 1 out of every 5 that are in a negative equity position bring $10,000 or more in negative equity to the table. The average amount of negative equity coming into one of these new auto loans is more than $7,000. So that's your lay of the land. What are we seeing happen? We've seen banks actually oscillate back and forth between allowing more loose credit in terms of 150, 160% loan to value ratios, and then tightening back up. There are different banks operating in different ways, those trying to gain market share, those trying to be more restrictive right now. You can probably get approved for an auto loan today. And I'm thinking about Carvana, for example, which they've come out and they said, as long as you make $400 a month, you can get approved for an auto loan, which is like, I actually don't physically know what to say to that.
What kind of car is that? Is that like a Fred Flintstone car or something?
So like there is lending going on in this space right now, Kai, but it scares the hell out of me, to be honest. And what a lot of these big corporations do is they bundle those auto loans and they sell them as asset-backed securities. So they kind of clean themselves of what's going on there, make a little bit of money, put the risk on someone else, another investor. That's your state of automotive finance. It feels a little bit like a house of cards if you're asking me to really give you my opinion. And if you wanted to go buy a car, you could probably get approved, which is nuts.
Yeah, it sounds like the payday loan scheme.
A little bit, yeah.
Terrible. Interesting. Like, I'm really trying to figure out, like, we're about 10% over the Fed funds rate. So there's a lot of risk priced in there. If you're looking at 15% roughly,
definitely,
that's insane in terms of the risk premium. So the auto loan, like the banks are assuming a very high default rate. Is that a fair assumption here?
They're assuming that. They're also assuming that because the mix of used cars is worse off, that the actual likelihood that people continue, obviously back to default, but like these vehicles are going to have more issues. These consumers are going to be under more financial stress trying to maintain these vehicles. So it's a little bit of a consumer risk story as well as a vehicle risk story. The makeup of these vehicles is just not nearly as strong. We haven't even touched on the fact that auto insurance rates are through the roof here in the United States. So just overall cost of ownership to be mobile in the US has gone up meaningfully since the pandemic.
Yeah, so the cost of gas actually doesn't really factor in that much when we talk about we need to bring energy costs and the cost of gasoline down.
No.
Like, how much lower are you going to get below $2.70 a gallon or so?
The gas story right now, the gas and fuel, obviously with energy too, is not that big of a story. The unsung and really the areas that are not focused on by most shoppers are going to be the depreciation cost of the vehicle. So we see vehicles losing their value like crazy. That manifests itself in negative equity. And then insurance costs, which a lot of people are seeing that because their insurance premiums are going up every 6 months or every year. So those are the two areas that are really, and then obviously maintenance, especially maintenance and repairs with those older vehicles, those are really starting to add up.
How do you see that developing? Let's be honest here. Like, how is that going to look? Let's assume 12 months, 24 months from now. Like, we're constantly on the verge of a recession in general. Hate to use that word because it's a bit scary, to be honest. But how do you see that developing? Like, who can afford this? Let's be honest. 15% auto loans here and cost of insurance exploding. Who can afford it anymore?
I think you continue to see a bifurcation between the haves and have-nots. So I think we'll continue to see, and this shows itself and manifests itself in consumer spending more broadly. I saw a stat yesterday. I think it was 50% of all consumer spending is coming from the top 10% of household income right now. So I think that's the same pattern you're going to see in the auto space. You will continue to see BMW, Mercedes-Benz, Lexus, and quite frankly, even like Toyota, who now makes $50,000, $60,000, $70,000, $80,000 vehicles as well. Those are still going to sell like hotcakes. People are still going to buy them. And then it's that lower market where used cars are going to continue to see their prices actually go up because people are looking for cheap options. And to your point earlier, Kai, then these banks are pricing in the risk there. So I don't see the market stopping or really slowing down. I mean, maybe there's a little bit of a plateau at a certain point here in 2025, but I think we are really, really, really stretching an audience, the more economical buyer thin. And eventually that'll manifest itself in some slowdown in sales. Although I would have thought we would have seen that already with how severe negative equity is. I've got a personal hypothesis and thesis that those people that bring $10,000 in negative equity are now not in the market to buy a car anymore. However, they're proving me wrong because sales are still happening. So it's a little hard for me to predict the future. My crystal ball is notoriously cloudy. However, I do think we will continue to further see that bifurcation of haves and have-nots. That I feel very confident in.
You touched on the average age of a car on the road in the U.S., and that's something I've noticed. The first time I traveled back to the U.S. back in 2021 after the pandemic here and the first travel restrictions were lifted, I've noticed that the cars are generally older. in the U.S. About I've looked it up for December 2024. I think it was 12.6 years,
Yep.
which strikes me as quite old. Actually, I'm not sure what that means in historical terms. I think it's been ticking
It's the
up.
highest. It's the highest it's ever been here in the United States. Yeah, age of fleet is the highest it's ever been.
Yeah, which brought me back thinking about the Cash for Clunkers program, and then I
Sure.
googled when that was, and that was July 2009 that was introduced. Do you see a program like that returning? Because it sounds like A, the auto industry will need it, but also B, the consumer will need it.
There's a chance that there could be some sort of government program similar to Cash for Clunkers. There was a thought during all the EV push over the past 2 years that there would be a program around that to try and get more ICE vehicles, internal combustion engine vehicles, off the road. I don't see a Cash for Clunkers 2.0 anytime soon. I think that's in part because the administration is taking a little bit more of a hands-off approach when it comes to trying to influence particular industries, at least in this case with the auto industry. But I wouldn't be surprised if there has to be some sort of material economic stimulus to try and get the auto industry going again. One of the things that the government is doing to try and preserve the American auto industry is blocking out, obviously, competitors. You see the tariffs, obviously, on Chinese competitors that have very cheap electric vehicles. So I see some level of government intervention, but I'm not sure if I see a full Cash for Clunkers 2.0. Again, though, the crystal ball, very muddy. Call me in 2 years when there's inevitably a Cash for Clunkers 2.0 and I was wrong. I will be happy to admit. I'll be the first one to admit.
No, well, you'd be benefiting from it as well, of course, Zach. But to put you on the spot, like, what are your thoughts on blocking Chinese cars entering the U.S. market, for example? Like, what are your thoughts on that?
I'm obviously a very simple man. I run Caredge. I try and help people get a better deal on a car. Me and my dad started this business 5 years ago. I am sure there are meaningful national security concerns with regards to allowing those products into the United States. Those are things that I am not familiar with whatsoever. That being said, capitalism here in the United States is predicated on consumer choice and giving folks as many options as possible. That's something that we preach. How do you get the best new car deal? You contact multiple dealers, have them pit them against one another. Whoever gives you the best price, you win. And so it is challenging for me as someone who understands that principle of, the more options for consumers, the better, to not have that taking place really makes me, scratch my head. And then on the flip side, I am no expert in national security. I am no expert in, the potential impacts of all of our information going into those vehicles. So, and then I also wonder, Kai, for what it's worth, we're already on TikTok. We're already on all these other apps, we're already giving them our data. So who really knows? So to me, it's very challenging to be able to become super opinionated on it. I'm really rooted in how can we just help people make a smart decision when the time comes to purchase that vehicle.
Yeah, it was quite eye-opening. I was in Ecuador the other day. This was last year, almost 2 years ago now.
Sure.
But we were driving around doing a sightseeing tour in a BYD pickup truck, which looked a bit like a Toyota Tacoma size-wise.
Okay.
And that was $15,000 versus $40,000. And that was the decision. It's like, that's why I bought it. Same reliability, same model. Like, it was a diesel engine, 2-liter diesel, whatever it was. And I thought, okay, 15,000 versus 40. That's and we're not talking even EVs here. Of course, price is a decision. Is a huge influence.
Totally. Yeah, we
Zach,
see a ton of pressure, Kai. I would just say we see a ton of pressure on the American automakers internationally. So in China, for example, like sales are plummeting across the board. Even for European automakers, they're losing market share to the domestic producers in Asia. So yeah, there's a ton of pressure there that the U.S. is definitely trying to play some defense against.
Yeah, no. So I'm not sure if we have to, but it makes sense. I see where everybody's coming from here, 100%. Sure. I got a couple random questions for you to end the conversation. And I mentioned to you before hitting the record button, we do have to talk about Tesla prices developing in the U.S. You're seeing a lot of outcry about Elon Musk, and people are associating or disassociating with the brand here. Like, how's that impacting the car price or the used car prices here?
Yeah, I mean, the used EV market, I'll start there. I'm going to go even a layer higher. The used car market is a little bit softer than it has been in the past. We talked about that earlier. Used car prices are down. So that's step number one. Step number two is used EV prices. Used EV prices are down significantly more than used hybrid powertrain vehicles and used internal combustion engine vehicles. So that's step number two. Used Tesla prices are down the most of any of the EV brands that are out there. I mean, maybe the Ford Mustang Mach-E is giving it a run for its money. So Tesla owners here in the United States typically are in a negative equity position. Again, like I shared earlier, 1 out of every 2. So 50% of EV owners are upside down on their auto loan today. And so Tesla owners are no different there. We are seeing some good news in terms of incentives from Tesla. So for the first time ever, some big finance incentives as well as some cash incentives. So that is excuse me, that's trying to drum up some demand here in the United States. But it is certainly a slippery slope that Tesla's on right now. But to be clear, all these automakers, including legacy automakers, are definitely on unfirm financial footing right now. So Tesla is unique in some ways, and quite frankly, auto in the United States is just shaky at the current moment.
Yeah, absolutely. No, it's interesting you're saying that Tesla's starting to give incentives. Sounds like
Yeah.
Apple will start selling the Apple iPhone at a discount here, or starting to put it on sale. Really interesting conversation. Another random question. I just have a couple more of those. But
Yeah.
would you buy a pre-owned rental car?
Oh, love this question. That came out of left field. No, personally, I would not. We provide all sorts of advice to folks on buying used cars back at Caredge.com. One of the most important things is getting a pre-purchase inspection. So if you're thinking about buying a used car, research pre-purchase inspection. Even if I got a pre-purchase inspection done on a rental car, I don't think I'd feel comfortable. You just know how people drive those things. So no, I'm passing on the rental car purchase.
Makes sense, because I remember Hertz selling like crazy during the pandemic. I was like, yeah, I'm not touching that. Like, it sounds, the pricing was interesting, but I was like, yeah, no, that's simply not happening. And
Definitely.
maybe last question here: what's the best deal out there right now?
Ooh, okay. Best deal out there right now. Put me on the spot. Mazda's got some really exciting deals. I'm thinking of Mazda in part because they haven't jacked up their MSRPs like crazy. So there's 0.9% financing on the Mazda CX-30 right now, which is pretty compelling, especially when the price point's like sub $32,000. Nissan Altimas actually have really great lease incentives right now. So you can negotiate on a Nissan Altima. I'm thinking cheaper cars, guys, for more affordable vehicles. Nissan Altima might be like $32,000, $33,000. And then you can get effectively the APR on a lease that would be like 3%, 3.5%, 4%, something like that. So there's some good deals to be had. And then it's hard pressed not to mention literally every EV, and some of the Tesla models, has 0% financing right now in the United States and massive lease incentives. So there definitely is a push on the EV side. Lots of deals to be had there.
Fantastic. What do you drive personally?
I actually don't own a car, Kai. I live in
What?
Washington, D.C. I sold my car years ago. I've got some aspirations once I move back out into the suburbs of some vehicles I want to own. But for now, carless. And I love the reaction that elicits from our community.
Oh, I can imagine. Absolutely. How can you be a car expert and not own a car?
It's
How does that work?
fantastic, man. Fortunately, I've got my dad by my side most of the time, and he spent 43 years doing it professionally. Although neither of us are car guys. Neither of us are self-proclaimed car guys. We love understanding the market and empowering people to make smart decisions.
Absolutely. I love your YouTube channel. It's phenomenal. Like, Zach, where can we follow you? Where can we send our audience? Where can they find some more of that great information here?
Yeah, thank you, Kai. So yeah, Caredge actually started as a YouTube channel, so I have the utmost respect for what you've built between my dad and I, my dad, Ray. So if you're on YouTube, just search Caredge. We have Caredge and then Caredge Live, where we do a podcast. And then if you go to caredge.com or Google search Caredge, our social handles will come up and the website's there. It's a shopping platform, a research platform. And we can also help you purchase a vehicle as well as offer services like a concierge service. You don't have to do anything, and our team of professionals can do it on your behalf. So yeah, Kai, Caredge, just Google it, find us. We're here to help.
Fantastic, Zach. Tremendously appreciate the time you've given us here. It was super insightful. I loved all the data you've shared. Really, really insightful. Really puts a good framework around what we're seeing. So I shouldn't be too worried about car loans causing the next recession here or the next global financial crisis. So I'm not too worried anymore. So I really appreciate you shedding some light here. And Zach, we'll have to have you back on maybe in 6 months' time to see where the market is, how are things developing, of course. So much going on the macro level that could impact what is happening on the micro level, which is the car loan or the car
Absolutely,
industry. So,
Kai. Yeah, my pleasure. Thank you so much for thinking of us. And anytime we can be helpful, that's what we're here for.
really appreciate it. Thank you so much, Zach, and to everybody else. Thank you so much for tuning in. Bit of a different discussion today, and I've learned a lot. It was really, really interesting to chat with Zach. If you learned something as well, leave a comment, leave a like down below, and if you haven't done so, hit that subscribe button. It's a free way to support our channel. We tremendously appreciate it. We don't just talk auto loans and car loans and the car industry. We talk about gold, the macros, US dollar, geopolitics, and of course, what is happening in the world in general on the financial side. So thank you so much for tuning in. We'll be back with lots more. Thank you.